Let's talk more about this now with Wayne McCurrie from FNB Wealth and Investments. As always, Wayne, thank you very much for your time this afternoon. Let's start with the overall market performance as well as the local unit. The JSE performing much better in line with most global markets, and I suppose a lot of the fears around of those geopolitical risks are starting to subside given the developments in the Ukraine with Russia and the United States, the announcements that were made a little earlier.
Yes, I mean, that's all very good news, and markets have gone up worldwide on the back of this alleged easing of tensions. But over time, even if something did happen, it doesn't affect markets for a sustained time period. It'll bit like the 9/11. It affected markets for a very, very small time period, the Afghanistan war. So, we sincerely hope nothing does happen, but even if something did to happen, it would have a very limited effect on markets. Markets are driven by, quite frankly, far bigger factors than geopolitical issues.
Right. The local unit, gaining some ground against the US dollar. And I want to just compare it because when you talk about the local unit, there are other factors, including commodity prices. The price of oil are still at record highs. And that obviously doesn't bode well when it comes to the short to medium term outlook for the price of petrol, as an example, Wayne.
Yes, well, look, petrol's going to go. If everything else stays as it is now, we're going to get another hefty increase the beginning of next month. However, we export more platinum and palladium and iron ore value-wise than what we import oil. So higher commodity prices, South Africa generally is a beneficiary of that. And when you look at the government, the finance minister going to table his budget coming up very soon now, we have got an enormous surplus, far higher than what anyone thought. On an extended time period that they look at it on the medium-term budget, we probably got 200 billion rand more tax in than what we thought. And that's all to do with the commodity cycle. And that's why the rand's stable. So the government finances are in better condition. When you look, even VAT receipts are higher. Personal tax is higher. And when you look at virtually all retailers and South African banks with their trading updates and their results, it's better than expectations. And that's also contributing towards the stronger rand. In other words, things might not be great, but they're better than what people were anticipating a few months ago.
No, absolutely. Let's get into some company updates. Wayne, Tiger Brands, they're releasing an update today. Revenue falling by about 1% in the fourth quarter to end December. But they've also highlighted here, apart from the strike action at some of its establishments, it says that there's a price war amongst bread producers, and that is having an impact on business.
Yes, look, it wasn't a bad trading update. The share was down slightly on an up day, but the bread business is an incredibly competitive business, and also I think we are all snacking less because we're not during full lockdown anymore. So I think we're buying less biscuits and that. But I don't think it was a bad update, but they are correct to warn us about a price war in the bread market. It's not the first time, and it won't be the last time either.
No, absolutely. And then DRD Gold releasing interim results here. This is interesting. Now, they've declared a dividend for their 15th consecutive year, Wayne, even though they did report a decrease in group revenue as well as operating profit. Talk us through this business model.
Well, look, the gold mines, it's a very, very volatile industry. They literally go from feast to famine in a very short time space, all dependent, obviously, on what the rand gold prices, and they're doing quite well recently. But even though their revenue is down and their costs are up, they've still got very, very strong balance sheets. Now, Pan African Resources, also a gold mine, they reported today their revenue was up and their costs were down. So, so there are clearly some items relating specifically to DRD. But, once again, if you can make the correct call on the gold price in 6 months' time, you will know whether to buy or sell the share because they are so driven by the gold price.
No, absolutely, indeed. Thank you very much, Wayne McCurrie from FNB Wealth and Investments, joining us to talk about the market movements of the day.